You are tuned in to the K-State Radio Network and another edition of Agriculture Today. Welcome once more. In the grain markets, all sorts of interesting developments of late. And of course, we'll talk those over now as we do every Friday with Research and Extension grain market economist, K-State, Dan O'Brien from his office in Colby, Northwest Kansas. First thing off, Dan, as we're very much in the throes of wheat harvest here in Kansas, prices are holding up quite well.
Yes, when you look at cash prices earlier this week, last time we looked at them, coming out Tuesday, heading into Wednesday, uh, Kansas, well, the KC hardwood winter wheat cash prices out in the country, Colby 571, 601 Salina, $6 to Topeka, Garden City 591, Hutchinson 601, Columbus 571. So yes, those prices are down from where they had been, say about in late April, when futures were at up to as high as 740 here. Futures with let's say in Topeka with $6 cash, we had July futures right at $6, just level. So really a surprisingly good basis at these locations, given that harvest is coming into has come into the southern border of the state and is moving northward into these areas. So I would say when you stand back and look at the market factors of this, it's interesting that for the week ending June 17th, got that on a report Monday out of the USDA Ag Marketing Service, about 20 million plus bushels of wheat exported out of the U.S. for the week. And we need a pace of about 17.4, 17.5 to meet the USDA's projection. So I guess it's not surprising that when harvest comes and the wheat's available, that we'd see a pickup in exports. So that's a good thing. Overall, for the marketing year, we're still looking at we're about 23, 24% of the way in this new marketing year, the one starting June 1st. Already bought ahead about 23, 24% of the way to the USDA's projection of about 900 million bushels. So interesting. I'm sure probably other folks on your program will be talking about what we're actually seeing out in the field, Eric. But if you want me to, I could mention some of that.
Sure, absolutely. It's been interesting to watch these reports from various entities, including Kansas Wheat, other sources, as to what's happening as the combines are scooting through the fields now pretty briskly, and it's a mixed bag in many respects, Dan.
Well, that sure seems to be the case. We read those daily reports. I think there's there are reports of some very good yields, a few instances of okay protein levels, but for the most part, a little lower average protein than we'd had in previous years. Dated June 18th out of the U.S. Wheat Associates, which is kind of an overall broad aggregate of these various reports for hard red winter wheat. They're what we're looking at is to compare to about 11.9% protein. That was the 2020 crop, and the 5-year average is about 11.6%. And given what we're hearing out in the field, it seems that that's not far off of where things are coming from. I would say our Kansas wheat people, or colleagues in that shop, are doing a great job of accumulating these reports. But what's so striking in those daily reports is the variability. There's some places that caught some rains and they have some outstanding yields. Read one report talking about how continuous wheat had like a 30 bushel average, and wheat following fallow or in some presumably in some type of other moisture conservation system had double that or more of yield. So a lot of variability, and of course the protein issue is front and center. I've talked with colleagues up in North Dakota, Frayne Olson, extension grain marketing specialist up there, and he had indicated that in light of our shortfall in protein, that they also are having some crop production challenges, and they have very spotty rains. His thoughts were that the size of that crop's down about 30%. That's preliminarily. Could end up being worse than that, but it's not a complete wipeout. And with the one thing about it, with dry weather, they'll have what they do get will be higher protein, but it might be shriveled kernels and some quality issues too. So in this big mixed bag of things that we're all throwing together, in trying to assess the wheat market, you've got that. I would add one more thing. Again, earlier in this week, when you do a head-to-head comparison, say in the Garden City area, where again so many feedlots are there, and look at the relative ratio right now at harvest of corn prices versus wheat prices on a per bushel basis. Well, at Garden City, you're looking at you were looking at wheat prices of 591. This is again about coming at Tuesday, heading into Wednesday, and corn prices at 715. So you have a ratio there of on a per bushel basis of wheat being 83% of corn. And then, but if you break it back down to a per pound basis, which someone would be concerned about if they were putting together livestock feed rations, you're looking at ratios in that area of about, well, wheat about 77%. So looking again, the Dodge Garden City Garden City area sure seems to be signals of wheat feeding, and we hear those stories anecdotally, word of mouth that's happening. The confirmation will be at the end of this month. Well, even that may trail, because when we get to the June 30th quarterly stocks report, it'll be recording conditions as of June 1. So it'll still be even trailing what we have right in front of us, because the wheat harvest hadn't started yet. So we may not get full confirmation of that, other than what we're told and what we see happening in the field. We may not get USDA confirmation of that until we actually get out to the September 30th quarterly stocks report. But as we stand right now, if wheat's being sold directly to feedlots, that's the answer. We'll see how that works out.
As we switch to the row crops, and you mentioned an important milepost in the USDA report coming out on the 30th, this coming Wednesday. Along with that will be the first indication on row crop acreage. And is the market going to be attuned to that, do you think?
I think it'll be very attuned. The expectation is that we'll see something like 93.5 million acres of corn planted. In fact, if we don't get that, if we're lower than that, then it'll be I would sure think it'd be a bullish number for the grain markets. I've tried to do some preliminary calculations on that, and looking at how corn supply demand balance sheets and prices would be affected, likely be affected for the new crop marketing year starting September 1, if we get first acreage increases as we're expecting, but more so lower yields, like we're seeing and seems to be being signaled in parts of the northern corn belt. Well, the Dakotas for sure, but now good chunks of Iowa, parts of Illinois, northern states pretty dry. Again, Minnesota, you name it, just dry conditions. So the USDA in their latest numbers are to plan for 179.5 bushels per acre yield for 2021. But we've had some pretty rough conditions in areas we just talked about, and if we end up same supply demand balance sheet numbers, same usage in particular, with again lower beginning stocks now, and if you bring that into this marketing year at 177 bushels per acre, you're still producing about just a little over 15 billion bushels, and you end up with prices 430, 435, ending stocks about 1.4 billion bushels. But there's risk of say 174 or 171 bushels per acre, given how dry these conditions are. And if you, let's say you have again 2.5% increase in acres, 174 bushels an acre for a yield, not out of the realm of possibility right now. You're down to about 1.1 or 1.2 billion bushel carry out. stocks to use 8%. And if you just go by what the historic relationships have been at that level, you'd be looking at cash prices of over $6. If you get 171 bushels per acre, then you're below a billion bushels, down closer to 900, and you're let's just say you're north of 615. That's for sure. And it probably starts with a 7 in front of it. So I think the moral of the story is, if we get those low yields, we'll have rationing. We'll have high prices, will ration usage, and it's just a matter of who's most vulnerable. Is it ethanol, livestock feeding, wet corn milling, exports? Not sure, but if we get low yields, I don't think we just dial in the same usage going forward if our production's constrained down to 14.5, 14.8, and now 14.5 or 14.8 with the very small carry in. That's a tight situation. So if we produce 14.8 or 14.5 billion, 0.8 or 0.5 billion bushels, remember we're comparing that against usage of about 14.765. So you would hope we'd have something produced more than we'd be using, or we're going to tighten things up and prices are going to be just that much more volatile to the high side.
We'll see what the USDA says in that report. And a quick glimpse here to soybeans, same notation as far as what we might see out of the USDA numbers there.
Yes, we'll be watching and see what the acreage numbers are. We're so focused on corn because that's been planted first, and so much is driven off of that. What's happening in the soybean market is that the export attention of the world has been shifted towards those available supplies in South America. I would say it's kind of a quiet headline, but things are so dry again in parts of South America that the Parana River is low enough that they're unable to get their largest ships up into those areas to load soybean exports out. So another supportive factor for Brazil on the one hand, and eventually for the United States on the other, as they're having trouble getting soybeans out of those areas because of their own weather problems. So maybe the best thing to think about on soybeans is that all these issues that I don't know if it's the best thing to think about, but an important thing to think on is that, gosh, all this dryness we're talking about with corn, how can it not carry over and affect soybeans unless we have late rains? And again, corn made in July, soybeans made in August has been our general idea. So it's a ways to go before we dechristen problems with the soybean crop, but it's pretty hot and dry in some of those areas. And if we're at risk on the corn market for corn production this year, eventually, if that persists, that it gets soybeans as well.
Lest we forget, weather still rules out there. Dan, thanks for the comments on the markets, and the next Friday we'll get together once more.
Thank you, Eric. Take care.
He is grain market economist Dan O'Brien, K-State Research and Extension, who puts together each week a good set of notes on what's going on in the grain trades, covering what we've discussed today and much more. Have a look at those at agmanager.info. And you're listening to Agriculture Today.